We are honored to have the CLI Board of Directors join us for a panel discussion entitled Shaping CLI. The directors will share valuable insights into CLI's strategic position and amid global challenges, and discuss growth opportunities as well as potential risks. Let's welcome our panelists onto the stage. I'll hand it over to you, Ronald. Thank you.
Thank you. Good morning, everyone. I'm Ronald Ong, Chairman of Morgan Stanley, and very, very pleased to be here to moderate this panel. Having come from Morgan Stanley Asia Pacific Summit a couple of days ago, where we had about 4,000 investors, I can tell you that the common themes that I've heard were interesting times, plenty of growth opportunities. Okay? So with that, I think we've just heard from Chee Koon on CLI's strategy and plans going forward. And I would like to take this opportunity maybe to kickstart is with the outline that Chee Koon had given, Miguel, Judy, and Gabriel. There seems to be strategic alternatives, not only growth, but geographical growth as well, capital optimization, capital recycling, which we all believe continue to be very important. So how would the board support management in their efforts in this regard? So maybe we'll start with Miguel.
Yeah, thank you, Ronald. Sitting here this morning and with the nice vortex as a backdrop, did bring me back some memory that about 13 years ago, I was standing right here, was the open parking lot of Terminal 1, and I was just newly appointed as the selection committee for Changi Jewel project to select the best design and best co-investor to join Changi Airport Group to build this. And at the time, I had absolutely nothing to do with CapitaLand, so a totally independent decision. And we picked out the three very worthwhile bidders, CapitaLand as our partner in CAG. And this vortex design is one of the kind. It's the world's largest indoor vortex, actually. And I think many of the tourists, passengers that gone through this airport has a picture with this vortex as the background. So sometime you waited 13 years ago, and in a very circular world, I came back as the chairman of CapitaLand, which now I'm sitting on the other side of the joint venture. But indeed, it's a very rewarding and satisfying experience for me personally. But talking about CLI and our board, I think it's important to know that running a board is not as clinical and as clear-cut as many people put it. Indeed, we have some, what I call the hygiene factor of the areas of three areas of responsibility, and that's really to safeguard the corporate governance and also to ensure that we have sound corporate strategy to go for the next 3-5 years. And thirdly, is, as Chee Koon said, people and organization culture are indeed really the secret sauce of any company to be successful. So the board does oversee these three areas of important responsibility for us, and we don't take that for granted. But on top of that, there are many unspoken and unwritten rules about what we can do to enhance the working relationship and the effectiveness of the board and the management, and as a result, CLI as a company. And these are things that we create a lot of unspoken chemistry we need to create with the management. We look upon ourselves, we had 10 directors who had done well in their career. That's why they make it to the board of CLI. So we have a lot to offer the management. But the ability for us to offer what we know to the management is not about endorsement approval and about if you come to us and if we don't agree, then you don't go ahead. So we turn around, become really the advisor to the management of the company to allow them to want to voluntarily seek our advice whenever they needed advice. And all 10 of us had our expertise, whether as a CEO of a bank, whether it's a private fund, public equity, and we also have market expertise in China, in India, and other markets as well. So that's how make a board click. And we have to remember also, CLI as a group has 6 companies, listed companies below us in the REIT. And out of the 6, two of them are STI component stock. There are 30 stocks in Singapore, and CLI Group has 10% of 3 companies in that STI component stocks, constituent stocks. So we really also set the tone for how board and governance are taken in the Singapore context as well. Work closely with SGX, with MAS in the case of the REIT. So I think the ability and appreciation that working with the management and in this CLI context is not just about having corporate governance to drive at the highest level, it's how to work with them and synchronize with them on a day-to-day basis and become an effective group of people who work to achieve our strategy to run a world-class organization and grow ourselves into that upper echelon of a fund management company in the world. So with that, I will just stop here. Thank you. Yeah.
Thanks, Miguel. Judy?
Well, thank you, and good morning, everybody. Really pleasure to be here. I've been on the board for the last 3 years, and I chair the ERCC, which is the Executive Resource and Compensation Committee, as well as a member of the Risk Committee. So maybe I just talk a little bit about how I think about myself as a member of those committees. When it comes to risk management, I think the board's role is not just about mitigating, evaluating risks, right? It's really how we understand the risks and make trade-offs versus the opportunities that we work with the management to see how those opportunities can create long-term value. Of course, we have very strong enterprise risk framework, as well as a lot of KRIs, key risk indicators, to make sure that we're moving in the right direction. But ultimately, is the robust discussions we have at the risk committees, and we challenge the management team to think about not just the risk today, but the emerging risk. And if I just give an example, right? Earlier we heard from Chi Kun about our aspiration to really diversify into opportunities, be it geographically or really take advantage of the various mega trends that's going on in the world. A lot of those conversations really come from our understanding of the risk, our understanding of the macro picture going forward. So that's what all of us on the board really try to collaborate and have very open, very forward-looking discussion. As a chair of ERCC, we don't just look at compensation. Of course, rewards and compensations are super important. But earlier, Chi Kun also talked about culture. I truly believe that culture eats strategy for breakfast. I really believe that. Right? And this is still a people business. It's a knowledge-based business. Earlier, Chi Kun talked about, our team, Zishang, Patricia, Sanjeev. And, we continue to want to strengthen and grow our own timber, so to speak, really, within the organization, identify high potentials, really give them the challenge to take the organization to the next level. At the same time, we also recognize that that's not enough. So the board and Miguel, myself, Gabriel, we spend a lot of time talking about talent because it is people's business. And, Lei Hong, of course, has been working really hard. And yesterday, if some of you read the news, we just made 2 really great appointments in Australia, Angelo and Rahul, and also earlier last year, we identified a very strong CEO in Japan, Hideko. I don't know if Hideko is not, hey, hello. He's a veteran in the real estate sector. So, whilst we grow our own timber, we continue to attract great talent in Asia Pacific and and to strengthen our bench. And we work very closely with the management on that.
Thanks, Judy. Gabriel?
Thank you very much, Ronald. A very good morning to everyone here. Miguel and Judy have said quite a lot. I may maybe just focus my comments on maybe board composition and board profile, because until recently I was chairing the nominating committee until I had to step off because of the change in my status to a non-independent director. I think the first thing if you notice, if you look at the board composition today versus 3 years ago when CapitaLand was restructured into CLI and CLD, actually the board has changed quite significantly. We have brought in 5 directors with financial services or PE backgrounds. You have Anthony, you have Judy, you have Belita, you have Helen, Farid, and we are going to appoint a few more with that sort of background to help to really provide a steer to management to compete and to do well in this, obviously, the new construct that is CLI. That's quite a significant difference from the board composition from pre-2021, when obviously the development role was much more prominent in the overall company strategy. From other sort of metrics, gender diversity, for example, we've also done a lot better. We now have 3 female directors on the board, and we're looking to appoint more. And on top of that, we continue to supplement the board with directors with important skill sets, whether in sustainability, digital, organizational transformation, and so on and so forth, precisely to be able to support management in many of the themes that Chee Koon talked about in his presentation earlier. So I think it's important when we talk about this, because the board, the way we look at the board, it is almost both a coach and a colleague. A coach in the sense that you've got to work very carefully with management to set the strategy. You've got to hold management to account for their performance. But at the same time also, you need to work very closely with them to deliver on our shared outcomes. And I think that so far the board has gelled well, even though we have new board members. I mean, we operate very well as a team. And to Judy's point, I think the culture of cooperation, but yet respectful challenging of management is there. And I want to commend Miguel for chairing the board in a very open, sort of very inclusive manner, because it's not easy to be able to have a board where everybody brings their different expertise together, but there's a certain unity of purpose, where there's an ability to not just challenge management in terms of their strategies, but at the same time also cheer them on in terms of getting things done. And the board members, I want to say also, what's critical if you look at the annual reports, incredibly committed to the cause. Many of our board members individually work with various senior management members to actually work through very specific work streams, whether it's evaluating a deal, whether it's working through organizational transformation efforts, whether it's sitting down to think about what is CapitaLand's investment for sustainability and reducing our carbon footprint. Each of the board members are incredibly committed. We sit down, we devote our time and effort to this, really because we believe that the company is doing something that's worth fighting for, and I think long may that continue. Thanks.
Thanks, Gabriel. Thank you, panel. I guess there's been talk about the board's approach to helping management shape CLI going forward, and we just heard from Gabriel, the term coach. It appears definitely that the part of the shaping of CLI going forward is geographical diversification, away from China. Not that China is not important, it is important, but we're talking about basically risk diversification and taking opportunities elsewhere, regionally or globally. So if I can ask the board, and maybe we'll start with Gabriel, from a geographical perspective, the markets that Chee Koon mentioned, the US, Australia, India, would the board be able to give your perspective on this and, how the board will support management in this regard?
Yeah, absolutely. One of the features of the point I mentioned earlier about the profile of the board is also that we have a board with a larger number of members who are overseas based or with significant experience overseas. Helen and Judy are in Hong Kong. David Su, whom I forgot to mention earlier, is based in China. We have Farid in Malaysia, obviously having a very distinguished career in Maybank covering Southeast Asia. We have Anthony, who used to head up GIC Americas for a very long period of time. And so my point is that we have, on top of that, Miguel, who is obviously had a very distinguished career also in many parts of the world, including the US and Hong Kong. So my point is that there are in the board many members of the board who have very deep and long-standing expertise in respective markets and also in the specific slivers and the verticals that CLI is going to grow. Financial services, for example, lodging, hospitality, and so on and so forth. So I think as far as geographical distribution is concerned, I think we're well placed. We can probably look to seeing how we can tap on expertise in, for example, some of the growth markets in India and Europe a bit more. But in the main, for the current board composition, I think we're in fairly good shape. I think what is very helpful in particular is really working very closely with management and the team who has extremely good boots on the ground, who are able to not just understand the markets, but build the networks, build the relationships, and be able to deliver either co-investments or deliver partners like Suchat, who's been able to help us to diversify our portfolio and to allow us to build a much more resilient business going forward. So we're quite optimistic about that, Ronald.
Thank you. Judy?
Yeah, so going back to our discussion at the risk committee, one of the KRIs that we have in the risk committee is looking at how to ensure that we're not too concentrated in any particular market or any particular asset class. And we work very closely with the management to make sure that we look at those thresholds. There's not hard and fast rule. But we have to look at those thresholds together also with the opportunities. So that's first thing is to we do have thresholds or targeted thresholds in terms of how we want to look at our overall investments, our FUM, and our overall resource allocation. And we track that quite closely, directionally. That's from a risk committee perspective. Earlier, I also talked about talent, right? If we are going into Australia, Japan, we have great internal talent, but we also need on the ground, right? This is a business where we really need to know the market. We need to know on the ground. Whilst many of the directors do cover many of these markets, at the end of the day, ultimately decisions, transactions, identifications, those opportunities are still, we rely on our team. And this is where, again, we look at talent, very, very focused on that. If I think about our portfolio in CLI, I think we have the best of both worlds. Earlier, Chi Kun talked about our 30 years in India. Not all 30 years are wonderful, but those lessons learned. And the board continue to just look at those lessons learned. How do we continue to grow in India? In India, we're very optimistic about the opportunities there, be it business park, a data center. And so, we support the management's aspiration in countries, high growth countries like India. Of course, in any of these emerging markets, the board also plays like a bad cop role, right? Have you thought of that? Try to also make sure that we've thought of all the risk. If you look at Australia, Japan, Korea, these are very stable economies that we're expanding into. And there, I think we also are looking at great opportunities. So I guess what we're saying is the board is, always challenging the management whilst make sure that we are working towards that diversification.
Thank you, Jim. Chairman?
I think the only thing I'll add to what Gabriel and Judy said is that this concept of the chairmanship here is a non-executive, but there's a term we also use internally quite a bit called an active non-executive chairman. It's a little bit of a contradiction in term. What that means is there's a chairman, I do not work day to day and try to be over-managing the management team, but at the same time, I'm active. I'm active in the sense that I try to be able to make myself available to management all the time. I just do not come to the board meetings. I keep an office there, I have a PA there, and I show up there almost every day. So that's how we work the board, that getting ourselves very engaged with the business. And also want to make a point about, we talk about the people and culture a bit. About 5+ years ago now, when we merged with Standard Singbridge, and I always joke about that. I was one of the dowry. I was a group CEO of ASB at the time and came in to CapitaLand as the deputy chairman and eventually be the chairman. But it's really more a marriage on many fronts. In terms of market positioning, CapitaLand is and was very strong in Singapore and then China. But Ascendus was the only company, real estate company, that have been continuously operating in India and by now 30 years. So it's very strong in India and Singapore also, but they also are very strong in the industrial asset classes. We call it the new economy asset class in the old days. So CapitaLand is in retail, office, and residential in those days. So we also married the asset classes on top of the market. But additionally, which one piece that has been quite a bit overlooked is the people side. Sitting here today with the CapitaLand CLI management, there are a lot of Ascendus Sandwich people who had joined the company. We don't talk about it that much now, but the management team had totally integrated. But CapitaLand also emerging with Ascendus Sandwich, also brought in quite many very competent professional managers as well. So that really allowed CapitaLand to start looking at the CapitaLand ambition today by doing that deal. So I think there are a lot of things that happened in the past that build the foundation for us in the future, and really hope that what we're doing today, all the things that Chee Koon talked about earlier, will also build our foundation for the next 5 years.
All right. Thank you, Miguel. Very interesting concept of active non-executive chairman and board, and I'll pick up on that. So as active non-executive chairman and board, with the plans that Chee Koon outlined, how do you measure performance? What KPIs do you use, and do you whip them, and if so, how?
The interesting part about measuring KPI is that Chee Koon obviously lay out a very 200 billion AUM in 5 years, and all the financial matrix, which Paul is going to talk about a bit. Those are things that consider measurable. But to get there is a lot of activities and a lot of good things that need to happen. So to me, it's really, for us being active, is measuring that on a regular basis of how things are progressing that may not translate immediately into numbers. So the board and my goal is to make sure that when we manage the business, we look at long-term sustainability, look at stickiness of the business, don't go always for the quick hit, and don't try to do any major short-term financial engineering that would help the company to look good in front of all of you analysts, but would hurt ourselves in the future, or it does not give us the optimal return as a company. Our goal is to really build a world-class asset management company that is not only good in Asia, but on a global basis as well. So we have a large ambition, it's a long-term one, and we want to make sure the board will always work with management to achieve that goal, and no short-term hit, no short-term wins, and no trying to take shortcut to get there, and that's our role.
All right, thanks, Miguel. Gabriel?
Yeah, thank you. Look, I mean, I think speaking to investors, you are more than familiar with the tangible metrics and KPIs, like share price, AUM, IRR, ROE, and so on and so forth. And that's obviously important. We look at that all the time, and we hold management to account for all of those KPIs. But I'll just say two more things. As a board, first and foremost, we do care about the intangible aspects as well. We do care about employee engagement, which is why we invest a lot in organizational development and organizational health. We do care a lot about sustainability and our commitments to get to net zero, which is why we also track that very, very carefully. And the reason why we care about these things is because at the end of the day, we believe that CapitaLand is here for the long term, right? It is not just about quarterly results. That's important, but it's not everything. We want to be here not just for the next quarter, we want to be here for the next quarter century and even longer. And so the longer term plans, what you are trying to build towards, how you're holding the organization together, especially with the amount of M&As and sort of bolt-on acquisitions that we're thinking about for the long term, is absolutely critical, because you want to be able to, when you want to be around for a long time, you need the team to stay together, you need the board and management to have a good relationship, And you need to make sure your strategy works in an environment that is by nature long gestation, long sort of duration sort of industry. So I just want to say that, just to assure investors that we are very, very seized and very focused on the tangible aspects, the tangible metrics. But as a board, we also look very carefully at the intangibles and what is necessary to build a long-term successful company for the future.
The only thing I'll add is, earlier Chee Koon talked about, the transformation from being a development company into ultimately investment management, private equity organization. And it does require a change in mindset, right? From using your money to invest most of it, and then ultimately investing for your investors. So on the back of that, clearly there are things that we have to do differently in the organization. I think under Chee Koon's leadership, we've been really focused on that growth mindset, the accountability that Gabriel talked about, ownership, and challenge. One of the challenges we have in many of Asian organizations is, especially if you are more in the development culture, is that you don't challenge the status quo. And I'm very happy to see that earlier Gabriel talked about regularly we do employee survey. Year on year, we're seeing that changing. The culture of growth mindset, accountability, the culture of challenge. Because ultimately, that's what investors want the organization, the management to do, right? And we have to reflect that energy, reflect that culture. Secondly, I think as part of our growth will be through M&A, and the board discussed a lot as we look through M&A, ultimately the discussion is not really, of course, on the health opportunity that transactions will bring to CLI, but we actually spend a lot of time on how the culture of that organization can work complementary together. It doesn't have to be perfect. It doesn't have to be the same, but how do we complement each other? And actually, most of our discussions led by McGill is on the culture culture fit as we acquire. So as I said, culture is super important. I think the board really works closely to make sure that that is what is going to be our foundation as we grow into the next phase.
Thank you.
Just want to add to that, Ronald, if you don't mind. There actually is a couple of very large M&A that came our way in the last couple of years. And the board's reaction is always that whether there's a cultural fit between the principals and the two firms. And very, on paper, attractive M&A deal didn't go ahead because of that. And I just want to make sure that we understand that cultural piece is central to how we operate as an entity.
Thank you. We've heard from management, we've heard from the board. I think there's a very, very important group of people we've not heard from. And these are, our capital partners and investors. At this point in time, I'd like to open this discussion to Q&A from all of you. So by show of hands, and just identify yourself before you ask your questions. Thank you.
A mic is coming your way. It's being passed from your left.
Good morning. Mervyn from JP Morgan. Thanks for the opportunity to ask the board, esteemed board questions, and I think I interacted with Miguel in the past. I have full confidence that the CLI will eventually deliver with your stewardship. We have a lot of clients here today. If I'm also, may add, institutional survey is open. Please do consider voting JP Morgan 5 stars as well. I know this is hosted by Morgan Stanley, but JP Morgan will be very highly competitive, and hopefully this also translates to CapitaLand's culture as well.
We share a common name.
Yes, we share a common history as well. Maybe a question from my perspective. Obviously, we want CLI share price to do well, total return share price and dividends that's driven by financial performance. And we do want Temasek to make a lot of money. Otherwise, those of us living in Singapore have to pay higher taxes. But in terms of board and maybe Temasek, I mean, what's the 3 key things that you are looking at that you make management answerable or reportable to drive the FUM growth, the ROE? What are the 3 most important things that you want to focus on or assess management on? Thanks.
So we had 3 persons here, so I think it's only fair, again, in a democratic world that we each pick one, so prepare for the next 2. So my first one, being only one, would be CLI actually has 4 verticals, and 3 of them are very stable and leaders in what they do. That is in commercial management, in the fund management. We're by far the largest in Singapore in terms of public fund management. And the thirdly is in lodging. We are a leader in the residential space in the lodging, one of the largest, not the largest in the world. So those 3, I think, that need to be a strategy of growth, but not try to really tweak that overly to change the business model and all this. But that remain my number 1 strategy, importance, priority, is the private fund. We demerged the company and put all the development business to our very kind and supportive major shareholder in Temasek to take over all that, is to make ourselves asset light and be able to grow in a very fast speed the private fund business. So my number 1 priority would be for us in the next 5 years to demonstrate to the shareholders that we indeed can transform, we indeed can change the culture in the fund business, and we indeed can grow this private fund business in a large scale, not just large in terms of size, but also in quality as well. So growing the private fund business is by far my number 1 priority that the management probably heard from me many times already. So I stop at that, Judy.
Look, there are leading indicators, and they are, of course, the outcome of those indicators, which are the financial performance. We talk about ROE, we talk about FUM, which we've laid out very clear targets. And as a board, we take a very long-term outlook, but we do look quarter by quarter, half-year results to make sure that we are on track. If we said that we're going to raise X dollar in FUM, capital raise, have we done it? And if we didn't, why? To really understand what are the challenges. So those are things that obviously we talk a lot about. Ultimately, I think what I look for, and we always do challenge the management team, is how do you differentiate? I mean, this is a hugely competitive market, and we have to continue to be the top players will obviously be able to raise the highest capital. And we are seeing globally, right? People are actually consolidating into the best players. So I think we do challenge the management team on our expertise. Whilst we want to play in Japan, we want to play in India, we want to go to Korea, we want to go to Australia, but what are we going to be best known for? A little bit as what Miguel is saying. Whilst we want to be the number 1 private equity firm, but in what? And what are our differentiations? And that we do, I think, we discuss a lot, and that's what I challenge the management team quite a lot, to make sure that if those are the areas we are playing in, we must be the best, and we must be very, very focused.
Yeah, thank you. So first and foremost, I want to state up front that I speak as a CLI director rather than on behalf of Temasek. I've been on CLI board longer than I have been in Temasek, and I've seen CLI through the journey from the ASB merger and the restructuring all the way till today. I agree with Judy, I agree with Miguel, but I would say that if you're asking me to boil it down into one metric, I'll say stock price. I'll say stock price because at the end of the day, as the ultimate outcome indicator, I do believe that that is the market's expression of confidence in the strategy and of the execution. As you know, a good stock price also helps significantly in many of our strategies, including with M&As in terms of share currency. And so if you were to really force it down into one KPI, it would be stock price. But I will caveat that by saying that I am a little bit less worried about day-to-day fluctuations of stock prices. I mean, there are many other stochastic, idiosyncratic factors that can go into that. But over the long term, over quarters, certainly over years, it is a manifestation, it is a reflection of the market's collective view of how the company is going. And we look at it quite carefully to understand what's underpinning that. Is it fundamentally a disagreement or a lack of confidence in strategy? Is it something where we can improve by way of comms? Or is that something that we are seeing some divergence between ourselves relative to our peers or relative to competitors? So I would say that to be, if you would ask me for one KPI, that would be it. Thank you.
Thank you. Further questions?
Hi, morning. So this is Shen from Goldman. I have one question on the trade-off between diversification and also stretching yourself too thin. If you look at the best companies trading at the highest multiple, they do one thing and one thing really well. With that, you have scale, you have profitability that peers cannot match. What's the board's thoughts on that?
I think ultimately, as I said, the board has guided the management team to look at diversification, and we've set thresholds. Sure, you need scale in certain sectors and markets, but our view also is that given the macro environment, how do we build a portfolio that is resilient through the cycle, right? So those are the trade-offs we talk about. I don't know there's a hard and fast rule. I think CLI has been more concentrated than diversified. So right now, we're working towards actually creating more opportunities across more markets and sectors. And that would be what we're looking at. But eventually, clearly, in all those countries and sectors, we want to be number one, or we want to be the top three. Maybe I also defer to Miguel.
I was thinking the first question came from JP Morgan. That got to be a question from Goldman, and sure enough, we get a Goldman question as the second question. Thank you for asking the question. My view is we, and Judy alluded to it in the earlier answer, that we need to do things that we're good at. So this good at is, and that create a question about do you focus or do you be more go into trying new things all the time? And if you look at a company like Blackstone, if you look at them and you can argue that they were very distracted in the early days when we were much smaller, and but they were able to execute. So they have over $1 trillion AUM now, and they've done things in generally very well. They had made mistakes. They had certain failed attempts to do things. They had to hand the keys back to the banks from time to time. But you know that they do try and they do fail as well. So the way we look at it, we're over $100 billion AUM now, Sing dollar, and our ambition to be 200. I don't believe that we can do everything. We need to really have a very stringent approach to what you call to gate, to unleash this approval to do new, get into new market or new asset class, new product. But at the same time, we also got to allow management team to try new things. If we don't allow them to try new things, but that try new things, not like a drunken seller, wake up in mornings that I should get into this asset class or this market. You really have a very well thought out and approach to sanitize, to scrutinize whether we should get into that new market. So that is a fine balance. On one hand, management and some of the younger generation are very resourceful in new ideas, but we don't want to, because I'm the oldest man in the room usually, cannot say, I've seen that movie before. It doesn't work. Every good movie can have a different ending. So I'm very conscious of that. So not try to say, I've seen that movie before, and that's a killer statement by itself also. So finding that right balance. I'm not answering your question, but giving my view that trying to find the balance between allowing management to take chances, to build new businesses, and to do new acquisition, new M&A, versus that they are going too far from wander off their adjacency and all this. I think it's a fine art. It's an art rather than something you can stay clear-cut that should or should not be done. But the process through regular engagement. You know, Chi Kung will come to my office from time to time and throw out these crazy ideas. And that's his job to have crazy ideas. And then I'll give him, you know, have you thought that? Have you thought that? But very seldom I said, don't go there. I've seen that movie before.
Yeah, maybe just to add, as a conceptual sort of high-level statement, it's very difficult to disagree, right? Yes, you can be overly diversified and stretched too thin, but you could also be incredibly concentrated and be at risk of a significant disruption. And we've seen countless examples of that across the corporate landscape. I think for us, I want to echo what Miguel and Judy said. I think that what matters is the ability to execute and the ability to win in their respective market. And I think the key to that is a few things. One, being incredibly disciplined about evaluating management performance on the ground, operational performance, you know. If you're building a business and you're top 2, top 3 in the market, I think you have a chance to succeed. And they have done that. Conversely, if you're going to a new business and you are not moving anywhere, I think it is the onus of us and of management to basically say, this is it, we need to exit, and we need to pivot, and we need to redeploy that capital into something where we can dominate and build a good business out of. And to be fair to management, they've done that. If you look at the statistics that Chi Kun presented about the quality and the extent of capital recycling, a lot of it has been pivoting out of businesses where we think we can't dominate or win anymore and redeploying that into areas where we can actually do good. So for example, Sanjeev, Mano, India data centers, you know, there's actually a very exciting business there. We would like to, I think there was a hint of that in Chi Kun's presentation, but we're hoping to convey more good news to the market in a couple of weeks or months. And we think that there's something that can be the nucleus around which we build out what was really originated with Ascendus Singh Bridges business in India over the last 30 years. So I think going forward, I think the main thing for us is to make sure that we stay disciplined, stay humble also, to understand where our competitive advantage and positioning is, and be incredibly disciplined about making sure we are deploying capital to the areas that give us the highest return.
Thank you.
Joy from HSBC. Maybe I'll just follow up on Miguel. You mentioned about private equity growth. If we look at the risk reward from private capital versus REIT, that's been actually quite different. Have we seen board changing its risk reward sort of framework when it comes to evaluating deals? And how do you look at return on those versus, you know, public capital?
Absolutely. This is front and center, how we're going to revamp the way you look at private equity. Clearly, you cannot look at the people who are running private equity the same as the public equity. It's vastly different business. One is the core business, at most the core plus. The other is mostly on the more opportunistic space and all this. So clearly that needs to be done. So I want to direct your question to our good lady who's chairing ERCC, because there's a whole load of work that's been done on how we are going to risk and reward the private equity people, because that is really essential, how we can run a successful private equity business.
Well, if I look at our, you know, how we reward and recognize our teams, the senior teams have always linked their compensation to, you know, align with what, you know, Gabriel talked about, you know, the return, the ROE, long-term performance of the company, and a big part of the compensation is deferred, right? As we get into private equity, clearly a co-investment scheme is super important. How do we make sure that the teams, how they're rewarded is fully aligned with the performance of the fund? And we absolutely want to recognize people that can deliver that outperformance. I think in terms of your question around how we assess, you know, these transactions versus maybe the public funds, ultimately, it still comes down to the fundamentals of those businesses, the opportunity of those businesses in the long run. Clearly, in the private equity space, we take even a longer term perspective, right? And most of it is close-ended, so we do take a much longer term kind of perspective as we assess those products versus some of the more public listed funds. But I think the key point to what McGill said is we want to make sure that our teams who are identifying those transactions, who are managing those transactions, their rewards and recognitions are fully aligned to the performance of the fund.
Thank you, Judy. More questions? At the end, I think that's...
Hi, Vijay from RHP. I just have two questions. My first question is in terms of the theme of the conference was a little bit about diversification into new markets, especially a focus a bit more on Australia. I think not long ago, CapitaLand had a big platform called AstraLand in Australia, which you diversified and allocated a bit more of capital towards China. Now the theme seems to have reversed a bit, that you are building a bit more of platform again in Australia and diversification. So what changed, and probably how would you explain this to investors, renewed focus on diversification? And my second question is on a lot of discussion centered on culture, cultural fit, and people of CapitaLand investment. Maybe can you just synthesize and explain a bit more to investors in terms of what exactly does it mean for CLI, and how does it differentiate from other managers who have a similar kind of theme for their people and organization? Thanks.
The Australian was done maybe over 10 years ago. I try to remember because I was not with the group at the time. But from what I understand of why the decision was made, at the time China was booming at double-digit growth, and indeed that CapitaLand has a huge competitive advantage over a lot of foreign competitors at least, and most of the local competitors. So they thought if they could divert more of their capital and balance sheet onto China, they can yield higher return because the capital commercial side was growing very fast. CapitaLand had one of the most enviable shopping or retail business in China through the rival cities and other malls. So I understand that was how the decisions were made. I'm not echoing whether it's right or wrong. I just looking from afar. Remember, I mentioned at the beginning, I was standing on this public parking lot trying to select who was going to run this at the time. So I was really totally from outside in. But that was how decisions were made. I think you could argue that it's right or wrong, and we did not have the crystal ball, of course, about China's situation today. So that could have been a major win by deepening our presence in China, or that could be a wrong move because China is what China is today in terms of macroeconomics. So I just answer you at that without committing to comment whether my predecessors, the management team or the board, had made a right or wrong decision. So I want to emphasize that point. And the second question is about, okay. I think we run a company with 4 verticals, and the 4 verticals have different success factors. In the lodging business, it's very much B2C. The success determined by the guests who stay in the hotel. So the culture of that, or the way that the critical success factor of the staff and the management are quite different from in the private equity space, the other extreme, where we're dealing mostly with the product, the LPs, etc. So the success factor dealing with a smaller group of people, they're looking, the money manager looking for return. So I think the important thing about CLI is how do we be able to harness the 4 different verticals and create a successful ecosystem. And the success factors is different, so it's the value of the company. And Chi Kun talked about quite a lot to the staff about the value of the company, about working together as a team, being able to always do the right things, and being to win through cooperation, through teamwork, and through hiring the best, through rewarding appropriately according to your business. those does not change. So I don't think we want to bond everyone together by saying that you have to have the same strength about deal analysis, about treating the guests, but we do require all our associates, our employees to really understand this very intrinsic value of CapitaLand, of being able to work together, be motivated, to work as a team, take the extra steps and all these important steps to take. So I want to see if my other two directors anything to add on top of that. Yeah, please, Gabriel.
Thanks, Miguel. Just a quick one about culture. Everybody talks culture, but not everybody lives culture. And I think one of the very, very useful barometers of culture and how it defines an organization is what happens during tough times. Not what happens during good times, because it's very easy to talk about it, but what happens during tough times. And I mean, obviously CapitaLand is seeing some challenging times, but at this point in time, right in front of you, everyone on the front row, Chikun, Andrew, Paul, I'm looking around, Janine, Lei Hun, Mano, Kevin, Irvin, Vince, they're all looking there and they're here. They're here, they're determined to basically grow the company, they're determined to increase the stock price, they're determined to grow the private equity, real assets business, lodging business, and the REITs business, and so on and so forth. And they're all committed to this. And I think that's what defines a good organization. That's what defines organizations of great culture. And that's why it goes back to what I said earlier, that CapitaLand is in for the long haul. We're in to succeed, we're in to excel, and I mean, we're fully determined to make that work. Thanks.
Thank you, Gabriel. I don't think we've got any more time for Q&A. I'm just going to do a quick wrap-up. We've heard from management, we've heard from the board on their perspectives of, key ingredients going forward to shaping CLI. Whether it's global diversification, product diversification, capital resilience, recycling capital. I think these are all very important themes to take CLI to the next level. So with that, just a very quick question to anyone on the board. 5 years from now, all right, what headlines would you like to see CLI make?
I think how journalists like to write about us is their own discretion. But in 5 years from now, I'm looking forward for CLI not just achieving all the KPIs the management has committed, but also build an organization that is enviable, that the people who join this company will want to stay or want to be part of. And then importantly, we'll be a global organization. And we'll not be Singapore. We could be, Children said many times, we could headquarter in Singapore, we could headquarter anywhere, because we're just a global asset management company. That's what I like the company to be, because just thinking about we are Singapore growing out overseas, we need to be thinking ourselves in 5 years' time as a global company that so happen has a headquarter in Singapore or elsewhere.
All right. Thank you. All right, thank you, panel.
Thank you so much to our board, Miguel, Judy, and Gabriel, and thank you very much to Ronald as well. Thank you.